It's been a milestone year for crypto. Spot Bitcoin ETFs launched in January, while U.S. lawmakers passed the first federal stablecoin framework. Institutional adoption surged with tokenized assets, but volatility struck hard mid-year, wiping out $90 billion in market cap. The bottom line, crypto matured in 2025, yet risks and regulation remain front and center heading into 2026. To help us assess where crypto stands to close out this year, I'm joined by Jim Ferraioli, Director of Crypto Research and Strategy at Charles Schwab. Jim, first and foremost, thanks so much for being with us. And now, after the Trump administration came into office, 2025 was supposed to be the strongest year yet for Bitcoin. In your opinion, how has that played out?
Hey, Jenny. 2025 was supposed to be a very good year for crypto. Everyone was very excited going into it. After the election, there were expectations that the U.S. would establish a strategic Bitcoin reserve. There'd be pro-crypto appointees in regulatory bodies. You'd get some pro-crypto legislation as well. We got some of that, but not all of it. And a narrative that reminds me of is really the 2020 election. If you recall, heading into the 2020 election, clean energy was a major policy for the previous administration. And what did we see? Following the results of the election, clean energy stocks rallied up until the inauguration where they sold off. Because what do we need to actually get policy implemented? Bills to pass the way through Congress. And so that's a pretty common kind of election trade where investors' expectations meet reality. We did get some of this in terms of appointees going through. Ultimately, we did get the Genius Act passed, which provided a framework for stablecoins. But the key piece of legislature that investors were looking for was the Clarity Act. That's the market structure bill that's still sitting in the Senate. We got a version of a strategic Bitcoin reserve. President Trump made an executive order, but it was very far from what some market participants were expecting, that the U.S. government would be actively buying Bitcoin. And so, again, it was a positive year for Bitcoin adoption and digital asset integration, but ultimately it didn't really show itself in prices. And I think looking back at this, people will just kind of understand that this was really just your standard election trade. Ultimately, Bitcoin did not outperform the market. And again, going back to that 2020 election narrative, clean energy stocks, while they did initially outperform, they sold off post-inauguration and they didn't outperform the market that year either. So that's my take on the prior year.
Okay, and so where do digital assets now stand in current on-chain positioning?
Yeah, we've talked about this a couple times now. Positioning is very bearish, and there's not a lot of on-chain activity. If we look at our positioning monitor, we have a couple measures of what the average cost basis is for Bitcoin investors. Our active investor cost basis, that measures Bitcoin that's been acquired in secondary markets. So it doesn't include Bitcoin that's been rewarded to miners. There's a cost basis of about $81,000 there. The ETFs have a cost basis of about $84,000. You can see options are pointing, there's a higher volume of puts around 85,000 in the near term and 100,000 for calls. And so that tells me that we're probably range bound here, seeing a 35% correction from the 126,000 peak. A lot of washed out positioning here. It's hard to get more negative in the short term, absent a bigger macro shock or something outside of Bitcoin. If we look at spot activity, ETFs are still seeing outflows as investors do some tax loss selling. Spot volumes remain very low. On-chain transaction fees, very low. Long-term holders continue to sell, and balance at exchanges is very low. So again, positioning very washed out. We are starting to see an uptick in leverage with futures and options open interest and total value locked in Ethereum starting to rise again. And we're also seeing that flow through in perpetual future funding rates, where they're actually moving higher. They've been at low levels for several months now. The fear and greed index is also moving off very low levels. In the short term and the 6 month term, there's still more demand for puts than calls, and we measure that through options 25 delta skew. And so, again, we're seeing some slight improvement there. From a miner's perspective, the miners with less efficient equipment, their cost of production for Bitcoin is about $90,000. So at these levels, it makes more sense for them to temporarily shut down operations, and we're seeing that with difficulty drawing down. And so again, just to recap, this makes me think on-chain positioning and activity is pretty washed out. I think the low 80,000s is a pretty reasonable level of support for the time being. I wouldn't expect to see a sustainable rally beyond kind of the mid 90,000s unless you get a sustainable increase in all of these different metrics.
Okay, and so what will you remember as a major milestone within crypto this year?
Looking at you back in history, I think people will describe 2025 as a year of great expectations. Bitcoin obviously is very volatile, but the biggest story in Bitcoin is its declining volatility. We reached the traditional peak of Bitcoin for those that follow the halving cycle. We had a 35% drawdown, so we didn't get a resolution as to whether the halving cycle is a thing or is not a thing. But a 35% drawdown in Bitcoin, just to put it in perspective, that's what you would expect. This is an asset that's 3 times as volatile as the S&P 500. And so if you expect on average a 5 to 10% correction in equities on a given year, that translates to about a 30% correction in Bitcoin. Looking ahead, macro factors remain supportive. Money supply in the US has been accelerating. It's been growing, but it's been at a below trend growth rate. We expect that to continue to accelerate next year. Liquidity remains somewhat neutral. The Fed's obviously no longer doing quantitative tightening. They're actively expanding their balance sheet, so that's a positive for liquidity. The reverse repo is really less of a factor going forward. And the TGA the Treasury General Account should really act more seasonally, whereas it pulls on liquidity around tax time as investors are paying taxes, and then those funds get recycled through the economy, post being refilled by taxes. If we think about equities, earnings revisions continue to move higher. We're positive on international equities. And so what that tells me from a crypto perspective is it's still a good market for risk. And crypto is the ultimate risk asset. So that's a positive. We expect 2 to 3 rate cuts next year. So again, supportive of cryptocurrency prices. A weaker dollar also supportive. So again, macro is supportive here. I don't think next year is going to be a year for fireworks. If we look at the average or the median rather, year over year growth in Bitcoin from its annual low to try to neutralize some of the volatility, it's grown about 70% a year since 2017. And I would expect 2026 to see far below 70% growth. I think it'll still be a positive year. I think you're going to see correlation to other asset classes and impact of some of these macro factors have less of a correlation with Bitcoin's price. If you're seeing a broadening out in the market, it makes sense that one of the areas that's done so well over the past couple of years could see a bit of a breather. The key thing I'm really looking for in 26 is the passing of the Clarity Act. That will finally open the doors to the institutional investors who are still hesitant to enter this space given the lack of regulatory clarity. If that gets passed, I think potentially in the second half of the year, you could start to see a sustainable rise in Bitcoin. But again, I think it's going to be a rather unexciting year for Bitcoin prices. I don't think we will make a new high. And ultimately, that's not an environment that lends itself to altcoin performance. Altcoins really need sustained Bitcoin momentum for their momentum to be sustainable as well.
Okay, well, thank you so much, Jim Ferraioli. And thank you all for tuning in to Crypto Corner. For more crypto-related content, remember to subscribe to Schwab Network's YouTube channel. That'll do it for us here. I'm Jenny Horne. We'll see you again next week.